You know, guys, we thought of doing this just once a month, but guess what? In February, we'll do it twice. And so here are another 3 stocks that you don't want to miss out in February. Now, important to note, guys, none of the 3 stocks that we mentioned in the slides are stocks that we own. And of course, now what we say is financial advice. It's purely educational. Guys, there's some good news. We will be giving a free giveaway of our FIRL Pro program, which is worth more than 2,000 ringgit. And you can participate in getting it in the description of the comments where you can find the details. The deadline for this participation will be the 6th of March. So time is running out. Let's get to it. Okay, so as usual, we'll be looking at 3 companies. We would like to do more, but we don't want the video to be half an hour long.
Yeah.
And always want to look at how the management is doing, right? Because this is one of the key ingredients, right, when it comes to assessing a company. So first one, Hartalega.
Yeah.
Look, gloves have been underperforming, obviously, and the hatred for gloves has grown a lot. And
I think it's at the peak already.
The hatred, right?
Yeah.
And we know that gloves are close to the peak when it comes to hatred because, in the past when we do videos, and if we do videos on any gloves, right, we're going to get views. Now we do it, we still get the views, but it's not as good as before. So what does this mean? It means that a lot of people have given up on gloves. And you know what Warren Buffett say, right? Well, you can go and figure out which quote I'm referring to. NFA.
Yeah. Okay.
Yeah, so year to date, Hartalega down 8%. In the context of a lot of stocks globally and here, not too bad, right?
Yeah, it's actually not too bad.
Not too bad.
Yeah. So this is the overview for the quarterlies and also their annual financial performance. You can see that in their latest report, they turned profitable and then they are back to loss making again. Yeah. Sadly.
Yes, but then they are on track to be profitable in 2023, right? The financial year 2023.
Yes. So yeah, so far it looks like it. They are making about 84.7 million. Yeah, which is
so big. That's crazy, man. They may not even beat their pre-COVID highs.
Yeah.
That is very shocking to me.
Yes. Okay, so this is the quarterly numbers. You can see the top line, which is the revenue. You can look at the current quarter, it is actually down 54%. Mostly, of course, it's because of ASP and also sales volume.
Yep.
Yeah, I think you guys hear this a lot of times already, gazillion times already. And then current year to date is down 73%. Profit is down 112%. And cumulatively, it is down about 97%. Yeah. It's a pretty big drop. They're still in a net cash position, thankfully. If you compare between them and Top Glove versus Supermax, Supermax is more because they have a capital commitment. They are actually committed to spend to expand their production line in Malaysia and also in the US. So that is something you need to note, and then you can figure out whether are they really still in net cash or is it like lower than expected. And then for Top Glove, they are like taking a lot of sukuk, a lot of also debt also. And they are burning a lot of cash also because of share buybacks also. So far, the 2 companies that have a very strong cash balance position, it is Hartalega and Kosan.
Yes.
So pretty impressive for them to maintaining that. And cash flow also, they are in drop like 90% from 3 billion.
I mean, this is the equivalent. This is the equivalent of going cold turkey.
Yeah.
After you take a lot of drugs and then you feel so good, then now you can't take any more. This is 3.7 billion to 100 million. Yeah. I say 100 million, right? But cold turkey.
Okay, so this is a quick final takeaway. Basically, we found out that they are currently selling about $20 per 1,000 pieces, and the management actually did say that they are trying to raise ASP.
Interesting.
That is actually pretty surprising. And they also, I believe somebody asked them why they are not lowering price to compete with China. Well, the reason is because they are making a different product mix. So I know the management is just trying to sound very nice and political.
Okay,
They don't want to
okay,
like hurt
okay.
anyone. So, but you and I know that China's glove quality is much lower.
In general, their
yes.
goods are less
and
good.
hence price wise they can
Yes.
charge at that price. Yeah. So we put it
yes.
that way. But then a good sign that we found out is that recently, if you follow the news, Care Plus actually disposed one of their subsidiary.
Right.
I believe another remaining 50% stake of this particular subsidiary to Ansell. And what this tells us is that there are already signs that small players are exiting the glove business.
Yeah.
And if you look at this chart bottom over here, so right now we are in the capacity rationalization phase.
Interesting.
Yeah, which is a pretty, I think it's going to happen way sooner than expected. Because I kind of like project it to be like happening in end of 2023. But everything is like going very fast right now.
Yeah.
So that's pretty good. And then according to Harta Lega, the next phase is going to be the demand recovery. So that will be an exciting phase to actually look forward to in the future. We never know. But the stats right now we're having is that the global demand for glove is about 300 billion versus the supply of 500 billion.
I don't think okay, I mean, I could be wrong. Obviously, I'm not expert, but I think it's not so much demand recovery. It's more like supply normalization.
Yes. Yeah.
Right. I don't know. Maybe by demand recovery, they mean that demand and supply gap will start to shrink. And you also have to remember, like the demand and the growth for the industry is like something 8 to 10% a year. So you're basically adding, going by this math, like 30 billion pieces of growth every year.
Correct.
Give or take.
Yes,
right?
correct.
So that grows steadily. That has not. To be fair, if you exclude all the COVID related stuff, that hasn't really changed much, right? People, And so now it's waiting for the supply to.
Yeah, we just need these 500 billion pieces to match 300 billion or go lower.
But of course, the big issue with gloves is the sentiment. I think people just hate it.
Yes.
Hey guys, if you're interested in building a 6 to 7 figure portfolio using the power of stock investing, head over to the comment section or the description to sign up for our free masterclass so that we share with you exactly how we do it.
Okay, so that's Hata, and now we're going to be looking at CTOS.
CTOS,
Yes.
okay, flat for the year.
Yeah, very flat,
Not
very
much
boring.
news.
Yes.
This is some of the numbers.
Yes, so if you look at the quarter 4 2022 versus the quarter 4 2021 numbers, is actually improving quite a little bit.
Right.
About 10% to 20%-ish. And they have their own financial year 2022's numbers right now. So you can see they make about 200 million in top line and 71 million in profit. And if you go deeper into their quarterly reports, you notice that revenue is up 36%, profit is up 15%.
It's almost a monopoly.
Yes.
So pricing power, things like that, always good. It is a company that, in my estimation, I could be wrong, but it's a company where the market is not really growing that much.
Yes.
Again,
in Malaysia.
In Malaysia, yes.
That's the reason why also they are planning to go overseas.
Yes, but unfortunately, they took away I believe their Philippine subsidiary away from the
CIBI. Yeah, correct.
Their explanation is that, they want to wait for it to be profitable, then only, they put it back into the Malaysian company. Interesting discussion there, but we're not going to have it right now.
Yes, correct. And this is their segment breakdown. You can see that the one that is actually
Digital
growing
reports,
a lot, is digital reports. And also the comprehensive portfolio review and analytics. That one grow quite a bit, and also digital solutions. Yeah, that's about it. The subscription and monitoring service is so-so. I think it is almost at the cap already lah. They're going to use capture every single market share in the market. So yeah, and this is another segment breakdown in terms of the geography. So you can see that international sales is actually growing a lot faster than the Malaysia. Yeah. Also, one of the reasons is they are exposing themselves more towards the Southeast Asia countries.
You know what's interesting, right? This digital reports growth. I don't know what's the contributing factor, whether it's pricing power or quantity increase. But if it is not pricing power, if it's quantity increase, it just gets you to wonder, there are so many companies in Malaysia
Yeah.
that still look at these reports like in a physical way format. And so, but digitization is really, really low. Assuming the big contributor is quantity, not price. So yeah, that's very interesting.
Exactly. Okay, so this is the balance sheet. They are in a net debt position. So you can see that currently they actually took out more debt in the non-current liability segment. So I think they're expanding their business either here or maybe it's like overseas.
Yeah, the thing with that is that if you don't have a recurring source of revenue, right, it's usually a bad idea. But it's CTOS. So literally people are forced to spend on them.
Yes. And not to mention their cash flow is also very strong because of that. Yeah,
exactly.
It's not like a business that they have to wait for like few months, then they receive the entire one.
Oh yeah, like if you don't pay them, then you can't, I don't know.
It's like a nasi lemak business. Put it that way, somewhat.
It's more important, like nasi lemak, you got a choice.
Yeah. Yeah, this one is you have to
you
spend.
don't have a lot of choices.
Yeah. Okay, so this is the final takeaway. They're still in an ongoing court case with one of these undisclosed plaintiff. I believe you can track it back in the few quarter report. We won't talk about here about legal stuff. Hopefully they can resolve it as soon as possible. And then their quarter to quarter revenue is up, profit is down. That is actually because of higher staff costs and also the low gross margin on product mix. But that's actually totally fine because they are the only one in the market right now in Malaysia. They are the monopoly business, so I believe they can do whatever they want in this market. And also, we noticed that there's a cash flow improvement, so that is a plus point for CTOS right now. And hopefully, they will still remain cash flow positive in the future.
Now, just to end for this, I think the only issue is, one of the big issues with CTOS, not so much as a company, but as an investment, is really the valuation, right? 40 times, 45 times.
Yeah, it's very expensive.
It is, if I had to guess, it's fairly valued. I think it makes sense for a company that is so dominant to be valued.
If you put monopoly plus brand name plus all this,
so I mean, if it was 20 times earnings, then maybe I'll sell my house. But right. Not financial advice.
Yeah.
Mr. DIY. Okay, so another Creator favorite, right?
Yes.
Down 7%.
Also nothing much also. It's very flattish.
Yeah, so you can see it's also flat. I mean, even the numbers before listing already showing flatness already.
Yes, correct. But it's a very stable business, very cash flow generative business.
Mr. DIY, right? I mean, like,
you just that's it lah. It's just they cater to the middle income to like below middle income, and that's how you make money lah. And if you look at the revenue versus profit, right, they actually have economies of scale. I mean, that is because they have like 1,000 stores, and then they just squeeze the utilization rate for each stores. Then hence the profit will start to boom.
But let's pay a bit of attention, right? So you grow your sales by 18%, but your profit only grows by 10%. What does that mean? It means your margin is dropping.
Right. Yep.
Right. So your absolute dollar is growing, which, okay, fantastic.
I think it's because due to competition also. B
is, how many more DIY stores can you open in Malaysia?
Yeah.
Right. It's the same concept with 7-Eleven. You know, the first, let's call it 500 stores, very, very profitable, right? You open in KL, you open in Penang, you open in, what's another high dense areas? Yeah, we don't have a lot of high dense.
Penang, PJ, you want to count that? Subang.
No, KL Selangor lah, just KL Selangor.
Yeah.
And then Penang, and
that's
then...
it.
Yeah, that's
Johor, I don't know, you want to count Johor?
It's all land in Johor lah. So, I mean, the basic format is like that, right? Like the question is like, if you build a 7-Eleven or you build a Mr. DIY, how many people in that area will go there?
Yeah, the growth potential is capped to the spaces in Malaysia lah.
Yeah, because you are selling convenience, right? So it's not like you are selling something like a very good nasi lemak where people don't mind traveling for 30 minutes just to go there. You're selling people expect Mr. DIY within 5 minutes.
Yes, correct.
So all those areas are already taken up. And where is the
I think this company, it's more of going to be a maturity stage lah. They're just going to pay dividends only instead of like share price growth. Yeah. So that's something you need to know. They are of course in a net debt because they are still currently expanding in Malaysia. They have not really fully expanded every single location, but they are still doing it. And cash flow wise, I mean, Mr. DIY definitely is very cash flow positive. I'll be surprised if they start to have cash flow negative.
Yeah.
It's actually a sign that maybe something is wrong inside the management.
I would be very surprised.
Yes, correct. And yeah, just like I mentioned about dividend paying, right? Yeah, so they have been paying dividends every single year. So that is a good thing. And that is actually the only way that Mr. DIY can create value for shareholders, which is to distribute dividends.
Yes, correct.
Yeah. Okay, so this is a takeaway. In their prospects, they did mention that they're still gonna be adding new stores. So right now they have about 1,080 stores.
Yep.
They're gonna increase about 1,200 in 2023. The revenue increase is actually because of the new stores that they set up. So they increased the stores from 900 to 1,008.
Right.
So which means in 2023 we may see revenue bump again because of these new stores coming out. But also that you need to take into consideration when is the stores gonna finish build, and also when is the sales numbers are coming in. So that's the thing you need to know. And the last point is that they always stress this formula, which is always low price. I mean, this Mr. DIY.
That's great.
That's actually a mode to always pressure
huge,
price.
huge,
It's a huge mode.
It's very simple. They just grow big so they can maintain the prices competitive when it comes to their products, and they become more and more dominant. So the Kodai, Runchit or whatever cannot compete. How do they compete?
And then they have no choice but to sell to Mr. DIY.
Are you a very good example, right? You and I, we play badminton. Okay, when you go to a badminton, what's the word? Court.
Yeah.
That sells drinks, right? Have you bought the water there before?
Oh, it's over 100 plus.
Okay, let's say, but do you know the price of, let's say, a normal, like a big water bottle, which is what people usually buy?
Yeah. Okay, so the last time that I went and I bought a big bottle is about 250.
250, okay. Yeah, it's around there. 250 to 3 ringgit.
Yeah.
Right? The ones I go to tend to be 3 ringgit. So, and they're not like very fancy kind of badminton courts, okay? Now, let's take Village Grocer, for example, or any other grocer. You want to know how much the same bottle costs?
I don't know, 4 ringgit?
$1.55.
Oh.
Now, you're like, wait, Village Grocer is fancier. How come the badminton court sell 3 ringgit? Answer is very simple. You
go to a place where you have to sweat and then you have to consume water.
No, not that. It's how much bargaining power does a badminton court have versus Village Grocer? So Village, it could be, again, I'm just throwing some random numbers here, but the concept is this. It could be that the supplier for the water, I don't know, Ice Mountain or whatever, says to badminton court, you want to buy? Okay, buy it at 2 ringgit. Right?
Right.
Or 250. Then they sell at 3. Village Grocer goes to Mr. Ice Mountain and says, you sell it to me at $1. Right? Because I can sell it for 150. And if you sell it to me for $1, I'm gonna buy a lot of it. And I'm gonna secure your revenue. So to Ice Mountain or to whoever, they're like, I'll accept a lower pay for
a bulk purchase.
It's a bulk purchase. Right? It's as simple as that.
Yeah.
Right? So, and someone like Village Grocer has huge bargaining power. Now, take that concept and then you apply it now for Mr. DIY. When they buy the screwdriver, when they buy the metal coils, whatever, they can bargain.
Yeah.
You think the random, Aheng Kedai Runcit, you think they can...
Yeah. I think one good thing about Mr. DIY is their delivery. So whatever they promise, they deliver.
Yeah, so it's cheap, convenient. When you have a business that is based on cheap and convenient, is very, very hard to mess up. That's why this is the whole Amazon mentality also. Oh, Mr. Competitor, you have a lot of margin, huh? All right.
Yeah.
10%, 8%. Oh, you go to 8, I'll go to 6. Then they destroy you.
Yeah. That's about it for today's 3 stocks that we will be looking at in February. And before you go, this is January 2023's portfolio. We're going to be adding a few more stocks in February. So make sure to check it out in our next few videos. And basically what FIRL Pro is all about is we share with you guys our stocks analysis reports that we write about them that we have very high conviction on. Some of the companies even we personally hold as well. And also it is held in the FIRL Pro portfolio. And we're going to be giving you 2 stocks minimum per month. Yeah. So that's...
But so far, we've done 3, nearly 4.
Yeah, 3. So yeah. And not only that, we also give you some random stock ideas that we have in the Telegram group chat. So if... For those that actually subscribe to FIRL Pro already, make sure to join the Telegram because I noticed some of you guys haven't joined yet. Yeah, make sure to click the link is inside the program there and join the Telegram because there's a lot of stuff that we discuss over there. And yeah, if you're still not convinced, please check out our free sample.
Yes.
It's totally free. You can just subscribe. The links, we put it in the description and comments down below for you to check it out. And yeah, that's it for today's video. I hope you guys enjoy watching the entire series of our 3 stocks to watch. Hope you guys continue to support. Make sure to like and subscribe for more of this type of content. Don't forget to follow us on our social media, Instagram, all those good stuff. The links are in the description and see you in the next video.
See you guys.